Good evening, guys. One last video for NFT Expoverse this weekend. I will be in the Just NFTs booth. So if you are in NFT Expoverse at the LA Convention Center this weekend, I will be there, and Xander Coin Miner will also be there as well. So come by, say hi, take pictures, follow us on YouTube. We did have 40 subscribers. Now we're back down to 39. Sad to see someone go, but obviously they don't like our content. So with that being said, please like, subscribe, and hit the notification bell. And we are going to finish the night out with crypto news. I am seeing that crypto is pumping, but I don't know if it's a bull trap or not. We'll just happen to see and figure out where it goes from there. But first, before we jump in, let's get into the intro. First news of the day, the crypto crash will flush out bad projects, predicts Guggenheim's CEO, written by Dimitar Zanzarov. And this is true because look at where Celsius is, look at where Voyager is, and look at where Three Arrows Capital is. Scott Minner, founder and managing partner at Guggenheim Partners, believes traders could take advantage of the significant price swings of cryptocurrency market and generate some profits. However, investors should be wary, as the sector is still not done flushing itself, making it an unsuitable investment option for the long term, he alerted. Despite the considerable spike in most digital assets following the U.S. Fed's decision to raise interest rates, the market is still far away from its best shape. In a recent interview for Bloomberg, the global CIO of Guggenheim Partners, Scott Minard, forecasted that it will all end up like the dot-com bubble in the late 1990s. In his view, the industry will flush out multiple meaningless projects and leave only the ones presenting certain use cases to the financial network. That process, though, means that investing in crypto for the long run could be a risky endeavor, as one couldn't be sure which assets will emerge after the collapse. He argued that Bitcoin and the altcoins have been facing pressure from global regulators. Yes, I also agree with that. While renowned institutions have not yet entered the ecosystem to give investors an additional dose of courage. Quote, I think it's going to have to deflate further, and we're going to have something similar to the collapse of the internet bubble, where we have a chance to sort out who are the winners and who are the losers here. And I don't think we fully flushed out the system yet, end quote. On the other hand, traders could speculate and make significant gains in the short term thanks to the enhanced volatility of the market, he added. Earlier this month, Edward Dow, former managing director at BlackRock, made a similar comparison between the current crypto winter and the dot-com bubble last century. He thinks robust digital assets will survive the turbulence while the worthless ones will disappear. Dowd see Bitcoin among those that will overcome the issue thanks to the underlying technology, transparency, and the freedom it provides. Over the years, Gunningham's executive has shared his opinion on the digital asset universe multiple times, which has been different almost every time. In December 2020, Bitcoin reached 21,000 for the first time in its history. Shortly after, Minard claimed that the asset's price should be around 400,000. He also said his company bought BTC when it was hovering at 10K. And the next week, the primary cryptocurrency continued its uptrend, tapping a new all-time high of $40,000. Nonetheless, this price surge was followed by a correction that drove it to 33,000. That setback was a reason for Minard to say that investors should take some money off the table. February 2021 was another great month for Bitcoin, and unsurprisingly, Guggenheim's boss returned among the bulls. He even said the asset could skyrocket to 600,000 in the future if it follows gold. His most recent price analysis occurred in May this year. Considering the poor performance of the crypto market, he envisioned a future price tag for BTC at around $8,000. Sounds super wishy-washy. U.S. Senator pressures Apple and Google over safeguards for crypto scam apps, written by Andrew Thorabalas. Senator Sherrod Brown, Democrat Ohio, chairman of the Senate Banking Committee, has sent a letter to the chief executives of Apple and Google demanding a response to fake crypto investing apps circulating in their respective stores. Remember, guys, I have yaps. They bark at everything. They're probably barking at a fly right now. As the announcement details, the Federal Bureau of Investigation, FBI, warned this month that fake cryptocurrency apps have already stolen $42 million from investors in under a year. These scams often operate by using stolen logos, brands, and identifying information from other established firms. They can create fake apps and leverage the legitimate company's reputation to fool investors into providing them with money. Brown argued that the imperative of steering investors away from such schemes lies upon the crypto industry, but also in the app stores that market them. Quote, "It is likewise imperative that app stores have the proper safeguards in place to prevent against fraudulent mobile application activity," he said. The senator has specifically requested that Google and Apple provide a detailed outline of the steps each takes when approving crypto apps on their platform. It is also asked about their process in reporting fraudulent apps and the frequency in which they monitor their apps for fraudulent activity. Brown's request was announced just ahead of a banking committee hearing pertaining to crypto security market scams on Thursday. Ahead of the hearing, crypto-friendly Senator Pat Toomey released a statement arguing that the Securities and Exchange Commission, SEC's regulation by enforcement approach, has harmed consumers. The crypto winter has whoa, that word looked really weird to me for a second. The crypto winter has ushered in an era of relative peace and safety from cryptocurrency scams, as explained by Chain Analysis Director of Research Kim Greer earlier this month. She said such fraudulent activity tends to rise and fall with the performance of the market. However, more sophisticated scams, such as romance scams, are becoming more prevalent. They accounted for $185 million in losses for Americans between January 2021 and March of 2022. Romance scams are always going to be around because what does everybody want? They want true love. World teeters on recession. What does it mean for crypto? Wesley Mezamore, this is a new author. U.S. Treasury yields edged up Monday as markets focused on inflation woes and recession risk. All eyes are on a two-day Federal Reserve policy meeting that concluded this Wednesday, and the central authority hiked the interest rates by 75 basis points, as many expected. A slew of tech earning reports this week and the latest GDP figures, which showed the second consecutive quarter with a negative GPD percentage, gave analysis to better gauge. Meanwhile, many warn the U.S. may be in a recession, although the authorities are still denying it. I saw something going around on Twitter that said that, was it this who, CDC, some government agency, I don't even know who, was changing the definition of a recession, and it's interesting. If you can find it on Twitter, read it. It's pretty interesting, because what it meant before is what we are in, but now they're trying to flip it and change it to where it doesn't look like we are in a recession. The Commerce Department defines a recession as a significant decline in economic activity spread across the economy and lasts more than a few months. GDP declined in quarter one of this year, on pace for annual decrease of 1.6%. Q2 2022 ended with a decline of 0.9%. The Fed has suggested it might be possible to pull off a somewhat soft landing, but after nearly 3 years of easy dollar loans, the FOMC may not be able to outmaneuver an economic crunch. Cryptocurrency has gone through varying correction regimens with stocks, but is there any correlation, inverse or positive, between crypto and GDP growth? It's difficult to be sure. That's because in the industry's entire short history, there has only been one very brief recession. That was in 2020 at the height of the pandemic and lockdowns. During that time, from February through April 2020, Bitcoin's price fell markedly across with other asset classes. But July, it had recovered its losses. After that, it skyrocketed by over triple-digit percentages until March of 2021. By then, the crypto exchange rate of Bitcoin to USD exceeded $60,000 for one Bitcoin. This time around, other factors than GDP on the price of Bitcoin are very different from 2020. The extreme worldwide fear, uncertainty, and doubt at the start of the coronavirus pandemic are behind us. Cash is king during times of broad economic uncertainty about the future. While the near future may have a recession, inflation, or both in store, at least the threats and weaknesses on the horizon are something businesses and markets understand. It's a far cry from the global disruption of the coronavirus pandemic. Cryptocurrency markets, like all markets, move with the ebb and flow of U.S. federal fund rate. As investigating extraordinaire Warren Buffett has said, quote, interest rates are to asset prices what gravity is to the apple. When there are low interest rates, there is a low gravitational pull on asset prices, and the most important item in valuation is obviously interest rates. It would be surprising, however, if analysts were able to demonstrate a connection between crypto prices and the total sales of every business in every sector in the country. Even designing a rigorous methodology to answer that question would be I don't even know what that word is. No idea. Undertaking. But one thing can be said for sure about economic downturns and entrepreneurial ventures. Like all of those powering the cryptocurrency industry today, recessions are fertile grounds for startups that go on to become some of the largest and most stable value creators in the economy. In 2008, more than half of the companies among the Fortune 500 had gotten their start during a previous recession. They also created less volatile, more secure jobs than the broader economy. That is why the Kauffman Foundation proclaimed during the Great Recession by mid-2009 that the economic future just happened. And FTX US enables stock trading services to American users. Users from all 50 states can take advantage of the option. Solana-based algorithm stablecoin plummets 99% after $3.5 million flash loan exploit. Gotta keep your stuff safe, guys. Ethereum daily active addresses at all-time high, but there's more. Increased adoption may not be the case for the latest spike, according to some industry experts. Nigerians rush to buy Bitcoin amid economy collapse. You see a lot of economies that are collapsing rush into Bitcoin. Ethereum devs finalize merge testnet details as ETH surges 14%. I read one down here. Here we go. This one. South Korean authorities issued a notice upon arrival to Do Kwon, Dimitar Zonzarov. The South Korean Ministry of Justice reportedly approved prosecutors' request that the notorious co-founder of Terraform Labs, Do Kwon, to be ordered to notify authorities when he returns to his country. He is believed to be currently residing in Singapore. The collapse of Terra's native token Luna and its algorithmic stablecoin UST was one of the most discussed topics in the cryptocurrency community 2 months ago. The latter lost its peg and dropped way below the target of $1. As a result of the accumulated panic, investors started selling their UST reserves in mass. Since the native token was closely connected to the stablecoin, Terra's team started mining more Luna to stabilize the crash. The process, though, increased Luna's supply and thus its price tumbled too. To consider the significance of the problem, it is worth noting that the asset was among the top 10 biggest cryptocurrencies by market capitalization before the collapse, while it was worth virtually zero just a few days later. Numerous investors suffered considerable losses, while some logically started looking for the culprit of the event, blaming the CEO and co-founder of Terra, Do Kwon. According to recent coverage, the 31-year-old South Korean, said to be currently residing in Singapore, will be required by the Ministry of Justice to notify the relevant authorities when he returns to his homeland. He will also have to face the charges against him, such as accusations of committing fraud and engaging in illegal fundraising. In addition, prosecutors have been looking at whether Kwon evaded taxes by transferring crypto assets to an offshore account. That is a no-no. It is worth mentioning that the South Korean authorities banned many of Terra's top executives from leaving the country, including Daniel Shin, another co-founder of the project. A month ago, the popular hacking collective Anonymous claimed that Do Kwon was the one to be blamed for Terra's crash and the numerous investment losses. As such, the group vowed to expose the executive's darkest secrets and hold him responsible for the adverse outcome. Quote, Anonymous is looking into Do Kwon's entire history since he entered the crypto space to see what we can learn and bring to light. There is no doubt that there are many more crimes to be discovered in your trail of destruction, end quote. The other scams which Anonymous mentioned might refer to Do Kwon's relation to another failing stablecoin from the recent past called Basis Cash. The South Korean was one of the co-founders of the project, which, similar to UST, tumbled to zero. He's gonna be in trouble when he gets home. Let's see, what else do we have? Web3 register Unstoppable Domain secures $65 million funding, written by Shaniqua Decca. Web3 focused digital identity platform Unstoppable Domains announced closing a $65 million in Series A funding. Its valuation now stands at $1 billion. The round was led by a new investor, Pantera Capital. Other participants include Polycon, CoinDCX, CoinGecko, Mayfield, Gangles, Alchemy Ventures, Redbeard Ventures, Spartan Group, OKG Investments, We3 Syndicate, Rainfall Capital, Broadhaven, L Ventures, Hardeka and Alt-Tab Capital. Initial investors Coinbase Ventures and Protocol Labs were absent from the funding round. According to the official press release, the latest funding round will be deployed to fuel project innovation and forge partnerships in the Web3 space. Matthew Gold, founder and CEO of Unstoppable Domains, asserted that the focus will be putting power back into the hands of the people by allowing them to control their digital identities. Paul Veritikat, partner at Pantera Capital, commented, quote, "Unstoppable Domains is rapidly defining a new category of decentralized identity that will change the internet as we know it. We're proud to back Matt and the rest of the team who are making this vision a reality," end quote. Unstoppable Domain essentially allows users to create a blockchain-connected web address similar to a URL that converts a digital wallet's address into a simpler human-readable name that connects with decentralized apps and crypto exchanges. Founded in 2018, the startup had registered 2.5 million domains to date. It has generated $80 million in revenue since its launch the following year. Before the $65 million investment round, the Unstoppable Domain had raised $7 million of funding. Unstoppable Domains partnered with a crypto payment firm, MoonPay, last month. The main aim of the deal was to incorporate NFT domains in transactions within the platform and facilitate entry into the Web3 space. As part of the collaboration, MoonPay users will be able to send and receive digital tokens via their domain names, thereby getting rid of long and complex wallet addresses. Last year, stablecoin issuer Circle also announced a partnership with the DLT-based domain name provider to implement simple and easy readable usernames for payments involving its USDC and replace the lengthy alphanumeric wallet address. Pretty interesting. I own an Ethereum name service. Of course, it's CryptoLissa because that's how all of you guys know me in the Web3 space. So with that, guys, we are coming up to 25 minutes. I like to keep these short and not so boring. So if you like our content, please like, subscribe, hit the notification bell. We are trying to get to 100 subscribers before the end of the year. And of course, you can find merchandise for us if you're a miner, if you're a female in crypto, and we have some NFT stuff on there as well, amdailycrypto.com, and of course links for everything will be in the description below, guys, and have a good night.